Hello and welcome to Crux Investor. We caught up earlier today with Kevin Bullock. He's the CEO of Anaconda Mining. They're a gold producer on the TSX-V. We talk about last year, $41 million of cash produced, record year for them, just double the size of their resource. They've got production, development and exploration. We talk about how they're going to move things forward. Fascinating conversation. If you want our thoughts and opinions on the company, the projects, and the conversation in general, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There's commentary from experts from all around the world, some fascinating insights, plus training courses on there to help you with your diligence process. We've done summaries of other interviews that we've done just to save you some time because we know you're busy. And if you fancy joining a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from trolling and abuse, you can do that at cruxinvestor.com/club. Hope it sounds nice. We think it is. And we'd love your feedback too. So give us a like. We appreciate it. Leave your thoughts below. We'll get back to absolutely everyone. And if you want to see precisely what we talked about today, take a look in the description below. Kevin, how are you doing, sir?
I'm doing very well. How are you?
Long time. Well, I'm good. First of all, thank you very much for asking. But we saw you at the beginning of December, but you've had a bit more good news. You keep delivering. So hence the call.
Yes, we made some promises back then about infill drilling and extending the resources at Goldboro, as well as trying to find additional ore at our operation in Newfoundland in and around the current infrastructure that we have, and we've achieved both. So it's a good time and I'm happy to be here to provide an update.
Good. Okay, well, let's just kind of paint the picture of all the kind of moving parts, and then we can sort of hone in on it later. So give us that 1 minute overview for people who haven't heard the story before.
Yeah, so Anaconda is focused in Atlantic Canada in two provinces, Newfoundland and Nova Scotia. We have a producing operation in Newfoundland that's been going for 10 years plus, producing between 15 and 20,000 ounces a year. It's a small production profile, and that alone was Anaconda in the past, but we've put forth a great aggressive growth strategy to become a 150,000 ounce a year producer. So currently we're 15 to 20, but we've really moved our Goldboro Gold Project in Nova Scotia forward quite rapidly, and we'll talk about that a bit. So production in Newfoundland, an exploration property just east of that's truckable to our infrastructure in Newfoundland. That's quite exciting. And a development project at Goldboro that just recently has grown by 100% in the total ounces, which is an incredible increase for a 43-101 resource.
Absolutely. So let's break that down because a few moving parts there. Again, just concerned about the people who have not heard the story before. So let's deal with the production component first, because that is your ATM. That's your cash machine, which is going to provide future growth. Okay, so why don't we talk about that? You've had a good year. The revenues are, record year for you guys. Why don't you tell us about that?
Yeah, we had a record year, 41 million in revenues. That translated into over 20 million in EBITDA at the project level. And also generated $14 million in cash flow from operations. So a fantastic year for us. And that just provides non-dilutive funds for growth in our strategy to move to be a much bigger producer.
Absolutely. And it's got a short life of mine, but it's always had a short life of mine.
It's got a short life of mine, and it has for 10 years. We've always had 2 to 4 years ahead of us for the last 10 years, and we currently have 2 years ahead of us. We're mining from one particular open pit called Argyle, and that's got about 2 years capacity. However, we've discovered an extension to a past producing pit that we have called Stoddard Height, and we're infill drilling that now. And the original holes that we drilled into that on the discovery ranged from 3 to 6 grams over 15 to 20 meters right near surface. So we're really excited about infilling that and expanding that, and we truly believe that will be our next mine at Point Rousse.
So how does that work? Because I read the grades. What is it? 6.5 over 16 meters, 2.8 over 8 meters. Some nice high grade stuff going on there. But how do you join those things up? Where's the economies of scale come from?
Yeah, so it's different than what we're used to. It's almost flat lying subsurface. So it actually didn't have a surface geochemical expression. It had a low order IP anomaly, a geophysical anomaly, and we drilled it because it was close to what we produced in the past and thought, what is this? And it continues, and it kind of undulates under the surface, which allows for us to extend it laterally without going too deep. So that's looking really, really good, and we continue to drill that, and we'll have news flow on those results over time. But we believe it's going to add something similar to the Argyle or previous Stoddard Height to the mine life, another 1 to 3 years.
Okay, so that's quite nice. So how much more money are you spending on that before you can, pull the trigger?
Yeah, we're spending about another $1 million on infill drilling. We continue to, on an ongoing basis, update the whittle shells or the block model, and it keeps expanding until we get a point that we think we've reached the limits, and then we'll infill to upgrade categories within that pit shell.
Okay, that'll be interesting to see how that develops. So, time frame. When do you think you're going to be able to start telling us a bit more about how you progress with that?
Well, as some people will know and others won't, to get assays back from the labs lately in Eastern Canada, because it's such a hot spot now, it takes some time. So it's like 6 to 8 weeks now. But we have been drilling for quite some time, so we will have some results out soon, probably within the next 3 to 4 weeks. And then they'll continue to flow because the timeline has started on receiving them back. So I would say in the next month or so, we should have some results.
Right, so that's Argyle and Stoggertite. So that we're looking at that one package. Next one I want to talk about before we can sort of look back at this thing is Tilt Cove. Okay, we talked about that last time.
Correct. Tilt Cove is very exciting. We've actually added, since we spoke, another 15 kilometers of strike distance to the south. So we now have 45 kilometers of an entire greenstone belt that straddles a past producing mine called Nugget Pond that produced at just under 10 grams per ton average grade. We're currently making $20 million EBITDA mining 1.5 grams. Imagine putting 5 to 10 grams through with a discovery at Tilt Cove similar to the Nugget Pond. We have 13 quality targets. The first one we're going after is a land-based target because the ponds are not frozen yet. We want to drill on some ponds which are created by the cross-cutting structures. So they're created depressions. We need the ice to drill on those, and we're waiting for that. But right now we're on a ground target, which is called Growler. And we've just finished the first hole of an 8-hole program. And we look forward to, again, receiving results in anywhere from 6 to 8 weeks. And putting news out on that program. But, it's a very, very exciting area because it's past producing high grade. And we can transition and leverage off our existing infrastructure at the mill that we have because it is truckable distance and quality roads. So, we don't have to find something big enough that would have a standalone infrastructure and we don't have to permit as long for tailings or anything because we already have that infrastructure at Point Rousse.
Are these companies price gouging, these assay labs? Because it sounds like they're high demand. It's long wait list. You can't jump to the front of the queue. It's probably not worth it, is it?
Well, we have the longest relationship with Eastern Analytical, one of the labs out there, and we're a preferential customer. But we're actually fast tracking results from Goldboro. So when we put our Tilt Cove assays in, they say, no, there's some other company ahead of you called Anaconda with the Goldboro assays. Well, that's us too. So, we push the Goldboro results because that is our development project. And we are delayed like everybody else with the other results.
Okay, so this basically you're expanding and consolidating at Tilt Cove. Again, talk to me about timing of where are you at now, and what's the timing of how things progress? Yeah,
so we've spent a year developing targets with geophysics, geochemistry, mapping, and we're now knocking them off one by one with a 10,000 meter drill program. So we're on our second target. The first target that we drilled, we were successful in finding mineralization. It just happened to be more copper dominant than gold because there are previous copper mines in the area as well. So we're on to the second one, Growler, which doesn't have surface expressions of copper. So it's a gold only target, and we're looking. It's brand new, never been drilled, wasn't identified till we mapped it as Nugget Pond Horizon, which is the horizon that we find the gold in. So brand new target generated by us, and as I said, the first hole went in of an 8-hole program.
Right, because I'm always intrigued about how you go about planning these things because it's quite close to the mill, right? It's about 45 kilometers from the mill. Right.
Correct.
And if you upgrade the quality of the ore going in there, obviously that's all nothing short of good news. And what are you discovering anything new? It's a VMS target, but are you discovering anything new about it other than it just extends for 45 kilometers?
They are all different targets. So the actual banded iron formation that hosts the Nugget Pond mines stretches for about 30 of those 45 kilometers. but it's cross-cutting structures that form the deposit. So we look for structure, we look for geochemical anomalies at that structure, because the cross-cutting structures carry the mineralized fluids. The mineralized fluids hit the banded iron formation, precipitate out the gold, and convert magnetite to an iron oxide so that you get a low mag reading. So you put all those together and you look for duplicates of the Nugget Pond along that trend. So it's not as if the trend stretches, it's the cross-cutting structure.
Got it. Thanks for clarifying. Okay, Kevin, let's talk about Goldboro, because last time we talked, it was quite exciting because you were talking about an underground mine with good grades, etc. But you then worked out actually there was a lot of metal contained in there, sort of like in a kind of bulk component to this too, which may have allowed you to look at an open pit solution. Obviously, economics are much more attractive. It sounds like a better way to kind of start the project. So again, how's that moving? Because you're going to have to try and work out what a new set of economics are around that, aren't you?
Well, Matthew, it's a step change. I mean, it's a material change for us. What happened was, as we infill drilled, and as we 45,000 meters of drilling of infill and remodeled the project based on that drilling, we noticed that our actual dilution model turned into an ore model. In other words, between the high-grade veins that we were going to go underground and mine, it is actually mineralized at payable metals between 0.5 gram and 2 grams. And there's a lot of it. It added about 40% of the total ounces today. And I have to say that we're at 2.75 million ounces. The last resource was 1.4. This is a 100% increase. But more importantly, our metallurgical programs, which are feasibility level programs, 33 composite samples throughout the mineralized deposit that we're going to mine, showed that the low-grade mineralization had the same recoveries as the high-grade. In other words, our recovery curves are linear, near linear. So the low grade doesn't drop off in recovery like you would expect and like normally happens. It actually gets over 90% recovery. So the overall recovery, including the low grade and the high grade lenses, which is now 2.7 million ounces or 1 million ounces in open pittable material, is a 96% overall recovery. That allowed us to lower our cutoff grade to 0.44 grams per ton because we get so much of the gold out in the process. And it created these very large pits. And it's looking like we're working towards now the translation of resources to reserves should look like about 100,000 ounce a year producer for plus 10 years in the open pits alone. That's totally different to what we were doing before. So how do we socialize that to the community, to the public, to potential shareholders? You have to put some economics around it to talk about it. So instead of waiting for the DFS, we even surprised ourselves with the amount of growth in this deposit, and we thought we better get some numbers around it that aren't as accurate as a DFS, but will be pretty good because we've been working towards the DFS to be able to talk about the economics of the project.
So talk to me about the permitting component there, because you mentioned something quite interesting in the sense that you are going to have to get the buy-in of the community, etc. Because an underground mine, very different from big, unsightly open pit mine. That's the way it's going to be viewed, isn't it?
I don't think it'll be reviewed as unsightly. I think it'll be looked at as an opportunity for jobs, a lot of jobs, a lot more jobs than the underground. And the community is totally behind us. We've had conversations with the community of Goldboro Council, and they're ecstatic that it's bigger. So more jobs, more money coming in. The footprint will be larger than an underground mine because there's more waste, obviously, in an open pit. But we will treat that like we do everywhere, Newfoundland and everywhere else I've worked over the last 35 years. We'll do it. We'll not release anything deleterious into the environment, and we'll go through the stages we have to be fully permitted. On that note, when we hand in our DFS, our definitive feasibility study at the end of the year, at or around the same time, we'll be handing in our environmental assessment for review. And that's a 6 to 18 month process until you get final permits. With a project of this size, let's say 12 to 18 months. So, it's a process you go through. We don't have any red flags. There's been some issues with permitting in the province, but that's where companies want to permit near either park-like settings or trout-bearing rivers, major rivers. We're in a very industrial area, and we haven't had any opposition against anything we've proposed so far.
Okay, so in the context of, the DFS submitted at the end of this year, let's say it's 12 to 18 months, let's say 18 months, you're still getting on with the business of running your business. You're producing cash, you're producing gold, you're producing cash, you're looking at extending the current production side of the operation, you're developing Tilt Cove. And again, it's kind of, you seem to have a kind of phased approach to the portfolio, which means that business is not affected per se. So the length of delays in permitting, not necessarily such an issue for you.
No, as a matter of fact, we're drilling now, still at Goldboro. We're infill drilling anything that did. I might add that the resource that we put out, the open pit resource of close to 1.1 million ounces, is what's called whittle constrained. The way you put out resources today, you have to constrain them with a conceptual open pit. And normally you would constrain them to all the ounces, including inferred, until you go to DFS where you're not allowed to use inferred in a definitive feasibility study. We chose to go with only measured and indicated for the constraints, so we didn't include inferred. Having done that, some inferred fall within the pit because it just is there, but we didn't constrain it using inferred. So it is, we have a lot of potential to grow still from here in and around the pits. It's an immediate upside, specifically in the inferred that's on the edges of these pits. With just more drilling, will convert into measured and indicated and come within the pit and expand them. But one thing that's really exciting is you get a lot of these flat line stocks when they decide to develop something because, okay, it's known it's going to be built, it's going to take time. We're not the same. We have cash flow from another mine. We have exploration at Tilt Cove, which is exciting. But we have 1.5 kilometers west of our Goldboro pits that hasn't been tested yet, where we know the mineralization continues to the west for 1.5 kilometers to another past producing mine called Dolliver Mountain, which is also on our property. So we have room for another large open pit to the west, and we haven't drilled there yet. So there's exploration upside on a development project.
Do you think, which I appreciate, and I think that's really interesting for you. There's lots of, well, for investors, there's lots of different stage projects to look at, underpinned by this cash flow, this ATM of yours, and by that I mean cash machine in the UK.
Yeah.
Do you think that your market cap at 134 is a fair reflection? You're producing, let's say, 15, 20,000 ounces, right? It's a fair reflection of where you're at, but it's probably not giving you much credit for the development or exploration, is it?
Well, that's another reason to do the PEA, because when the economics are done and we have a discounted NPV or NAV for the Goldboro Gold Project and what it's worth, I mean, I can't talk about that yet because it's not done, but I would bet my bottom dollar it'll be well through what our market cap is, significantly well through. So, the value of Goldboro will be realized over time as we meet hurdles. And, we're starting from a point, I mean, we're up considerably over the last year, probably 400% in our share value. However, we're 120 million, 130 million market cap Canadian. That's under 100 million US. And we've got close to 3 million ounces in Nova Scotia. That is, a lot of it's going to be mineable. Over 1 million ounces is mineable through open pit alone. Those metrics don't work for me. I mean, we are. Everybody that comes on your show is going to say they're undervalued because we always, as companies, feel we are. But we can point to it, and we want to point to it when we get this PEA done, and that's due next quarter.
Right. So you produced 41 million in cash last year. You're putting that back in the ground. You're putting that back into exploration. You're putting it back into development, as you should. Are you going to need to raise any additional capital, kind of move things forward at a faster pace, or are you kind of good with what you've got?
We're fully funded to do all of our programs that we have currently outlined until we get to the point that the feasibility is done, and then we obviously have to go out and do project financing after that. As we continue with our permitting, we'll take the definitive feasibility study and take it to investors to look for project financing. And in a first world, for something that will be the highest grade open pit in the Atlantic provinces and the second largest deposit, it won't be something that's looked at as if it's in some area that's difficult to work in.
Right. And do you think you're getting there's a discount being applied because of where you're at? Or do you think, gold is gold and if we're producing it, it shouldn't matter?
No, I think you get discounted if you're in difficult political places or places that are difficult to work or have a history of difficulties. But this is a first world. This is Nova Scotia. I mean, this is Canada. You drive on the highway to the site. It's not far from the highway, about 7 kilometers on a quality road. There's power to the site. So this would be something that's quite attractive to anybody who wants to finance a project because it is a quality project in a first world with known tax regimes, etc. So it's something that I think would get a premium over time as we, not a discount, as we get through our hurdles of permitting this.
Right. It'd be interesting to see, how many people start paying attention to you. I mean, that resource you just put out, I mean, you double the size. It's nice. It's a nice size. And if you're talking the language of trying to be a 100,000 ounce a year producer, you're going to get noticed for sure. Anyone knocking on your door from the institutional side of things, wondering what you're going to be doing this year, or even, quite frankly, in the game themselves? Are they starting to?
Well, we used to be traditionally a retail company because we were 15 to 20,000. Quite honestly, it should have been a private company. We were a 15 to 20,000 ounce a year producer, and that was it. Now we're getting a lot of institutional interest, and the institutional holdings within our company has stepped up quite a bit. I think before, since the last time we spoke, we have a very long-term holder out of Switzerland, purchased 5% of the company, and we have several other institutions that are buying or looking to buy and talking to us. So people that wouldn't have the time for us before because we were too small for their minimum investment. So it's quite exciting, the amount of institutions and funds that are looking at us now.
Well, that's the bit that interests me, and that's why I asked the question, which is you get a kind of stability through having more institutional holding there, because we've seen the price of gold's dropped off. Precious metals has been hit a little bit. People got distracted by stuff, and retail can be a little bit fickle in that way, and that's not necessarily the best thing. So, are you consciously going out and soliciting these conversations, or are they just noticing you because of the resource you're putting out and the scale
it's
you're
both.
projecting?
It's both. We're so proud that we accomplished what we said we'd do, that we're going out trying to tell everybody, but we're also getting a lot of inbound calls of people saying, what's this? It just, how'd you go from something that's 1.4 million to 2.75 and turn from an underground to an open pit? And then people are starting to understand it. And of course, the share price is reacting accordingly. I mean, not everybody, but a lot of companies have gone down a little bit over the last week because of the price of gold, and we've actually stayed flat or gone up even. So and our volume has increased considerably.
Well, that's why we're kind of keen to see as well. You were at 58 cents when we last spoke, whenever that was, around the 10th of December. Now at 84, 86 or so. That's a meaningful move. So what should people be looking out for this year if you are to continue this run? Well,
the PEA that comes out next quarter that puts financials, that is certainly going to show the robustness of the project. And drill results from various targets, being Stogger-Tight to extend the mine life, Tilt Cove for the future of Point Rousse, and Goldboro for infill, and possibly drilling the west for another mineralization that might turn into another open.
Beautiful. Kevin, thanks for the update. Appreciate it. When you get some of these numbers back, I mean, do call us, because it's great to see what you're doing there. Appreciate your time today. Speak soon.
Thanks, Matthew.